All right, ladies and gentlemen, welcome back. We got another chart talk coming at you. It is the last day of January, January 31st. We've got maybe the biggest week of news we've had in a year or so. And let's get right into that news. So we start off, we have a huge week of earnings. Let me just share my screen right now. Screen two, share that. All right. Here's the S&P. Let's talk about the huge week of earnings that we got. So here's the briefing earnings calendar. Here's today's earnings. Yesterday's. Here's this morning's. Now we're getting AMD after the close and a bunch of other names. But earnings season really gets into high gear Wednesday and Thursday. Wednesday we got Meta, QRVO, a bunch of these big tech companies start to report, and then Thursday is the biggest day. Thursday we have, look at this, Amazon, Apple, Google, and a bunch of other like smaller but still big names, Qualcomm. So we have 33% of the S&P 500 reporting earnings this week, and we have Jerome Powell and the Fed raising rates tomorrow. And we've got a bunch of we got employment numbers Friday. There's just a ton of different news pieces to try to grasp this week. So it's really important to just kind of keep your head on straight and focus on the price action. Don't overthink about the environment and the implications and things so much. But without further ado, let's talk about the implications of the Fed tomorrow. So the Fed, we are running. This is the S&P 500 right here, the SPY. Where we have a nice little uptrend going right now. We're trying to break out of this huge macro pattern. Right now, things look good, but things can always change on the stop of a dime. Especially with this market going forward, we've seen a lot of confidence out of the bulls. Seeing the high flyers, like the names that got beaten down the most, the ARK names. The high growth names. We've seen these names benefit the most in January, and in recent past in this bear market, whenever those names pop, they have a vicious pop. They're the first ones to sell this off, and they lead that next move downward. So it's a big question of whether things changed or not from a broad market perspective. And honestly, I could see bulls or bears winning this battle, and nothing would surprise me at this point. So tomorrow, let's talk about the Fed now, real quick. The Fed is pretty much it's going to raise a quarter of a basis point, brings us to the 4.5 to 4.75 federal funds rate. And Jerome Powell, what we're looking for tomorrow is his quote unquote language. Is he going to say, let's keep rates higher for longer? That would send stocks downwards. The bears would take over in the most likely scenario. Or if he talks about, ending the rate raising cycle, that's all about tomorrow. All what tomorrow is all about is whether he says higher for longer or he says, we're going to end this thing soon. So obviously he's going to, revert it back to inflation and all these other things. But tomorrow, the key bullet point we're looking for is higher for longer, or we're looking to end this thing soon. So it's kind of that simple for me. I'm just taking things on a day-to-day basis. I had some good longs going through today, but I pretty much sold everything. I'm just going in flat till tomorrow. And that's really got for a broad market outlook. You want to take over from here?
Yeah.
You muted. I stopped the share. You're back.
All right. All right, so you did touch upon a lot, so I'm not going to go.
I touched upon a lot right there. I know.
Left me with nothing. But again,
whoa.
No, I'm kidding. But a lot of sectors, a lot of individual market looks great. 10-year kind of basing out here. We'll see what the Fed does tomorrow. We'll see if this has any little relief bounce in it. But I still feel that we'll continue to see low price in 10-year, lower prices in interest rates on mortgages. Sector-wise, it's really good to see the biggest laggard of last year, telecom, finally breaking out of its base in the short term. We finally saw the tech sector, with the NASDAQ also finally breaking out of its major downtrend, as you touched upon, the S&P doing that. So it's good to see that tech was so weak last year that it's good to see some positive action out of it. A lot of the other sectors are pretty much all setting up and basing within their relative resistance areas. The two to avoid in the short term seems to be healthcare, as it's the only one kind of pushing down into support and testing it, and consumer staples, for whatever reason, Staples right now is very weak to continue to H over from the run it's had into resistance. So it seems like healthcare and Staples are sectors to avoid. And pretty much all the other sectors look very strong and, much easier to keep a focus on those. So that's a quick little take on that. Just while I'm still sharing my screen, I'll go over a couple quick trades I got into today. Got ticked in this monster basically at the close through this 104, keeping it very tight versus this 102 pivot. So $2 risk. This is a blue sky breakout. So we'll see if it gets any continuation tomorrow. And I got ticked into this INSP, which doesn't look as good. It's good, a little slow. So I got ticked into this 260 today, kind of retraced, kind of pulled back. Not the best sign you'd want to see out of a breakout. So instead of giving this original stop versus 240, given that it's kind of reversed the entire move today, keeping the stop much tighter versus this 250. So risking about 10 points or 2.5% in this INSP, risking about 2% in this monster as well. And then keeping a closer eye really on this Etsy through 140. Doesn't have earnings until the end of the month. So plenty of time for this name to potentially break out through 140 versus this 130, 135 area. And also keep an eye on QSR through this 68.5, which probably is not going to go until after earnings would be my guess on that one. And also this ALNY. Keep an eye on, but again, earnings are coming up next week. So really the big focus is this Etsy for the week ahead.
Yeah, I want to ask you a question about this Etsy. So bring up the Etsy chart.
Mm-hmm.
This is, I'm kind of going back and forth on these. You want to zoom out? So, all right, really nice base forming, and we can definitely agree that's obvious. The base is forming. Etsy's still a pretty good chart. I guess it's still like 50% off highs, 60% off highs.
Yeah, but
Do you have any hesitation? Do you have any hesitation with these names? Because there's a lot of these names. There's like Pinterest, type up pins. Everyone's looking at this pins. I guess pins a little more dramatic. Etsy's a little more of a healthy chart because it didn't fall so drastically from highs. Pins is still like 75% off highs, it looks like ish.
Yeah.
Whatever. So people are looking to buy this Pinterest, and to me, this is still pretty much a bottom right chart, So I'm kind of perplexed where it's like, all right, this does have technically like a 6-month base going on, but at the end of the day, it's still a bottom right chart. Are these the names we're going to see come back, like flying back in 2023 if the market catches a bid, or like this Etsy, so or do we avoid those names and just stick with the relative strength? That's like what I'm thinking about every day is should I have more focus on Spotify, Shopify, Etsy, Pinterest, those type names, or Meta? There you go. There's another one. The names of yesteryear that were so good and they're so beaten down. Now their valuations start to look attractive, I guess, if you look at some metrics. But or do we just stick with the technically more sound charts, which are mostly biotech names, and I guess oil and gas is still up, and there's a lot of names that are still up at highs, Caterpillar and stuff like that. UPS came out of a big base today, like that's more value name. But so I'm wondering about these Etsy's, Pinterest, Spotify. Are you positioning yourself to kind of trade these names higher? I know you like Etsy, but
I mean, I'm a big
for
fan
example,
I'm a big fan of
more of these setups. Are you taking them?
Yeah, I'm a bigger fan of Etsy in particular, but just from like a percentage standpoint, it's when the names, like if you think of like the Carvanas or the Pelotons, like those are names when they've fallen too much percentage wise. Like this is a 95% drop. Like this is dead.
Yeah, holy shit! I'm leaving numbers like
it's
360, huh?
So it's like
people were texting me yesterday about a short squeeze in Carvana. I couldn't even see it on the chart. Like, oh my god, it's up whatever percent. I'm like, Jesus Christ.
Yeah. So it's when the stock has dropped more than like 80% is typical. In my opinion, the stock is just too dead. Where like for the Pinterest, $90
Pinterest,
down,
that's that right around 80%.
It's like it's close. It's close to like that percentage amount. I still think it probably gets a move through 20, through this 30 in time. I would much rather be in Etsy through this 140 for that move back to like this move. In my opinion, it's like Etsy could be back near highs in a little bit more than a year. I can't say the end of this year, but within year and a half, realistically, I could see Etsy retesting those highs.
Really?
I Pinterest, this is a little bit more beaten down where like these, even if you think of some of the oil names, I'm trying to think of, you think of how smoked the energy names got in 2020 and, from, it's not, this isn't like really
you
good
do
example.
XOM's the leader. Do XOM.
Okay. So if you think of like
They've got earnings in
XOM, yeah. So if you think of XOM down here during the pandemic, no one would have really expected XOM to reclaim its pre-pandemic highs or all-time highs and exceed that during this in this moment. Like when if you just looked at the chart, like right now, it's like oil's dead,
when the world shut
barrels
down,
are
people didn't need gas.
yeah.
I
So
think. All right, yeah, go on.
mhm. So I think this is a harder trade. I think like for me for Etsy, it's more of like an M1, like increasing the allocation of the model towards Etsy because it's now much more affordable than it was say a year ago. I think it's going to be easier longer term trade. I think from the swing trading standpoint, like buying pins through 28, I'd much rather buy the quote we're buying through 22. I'd rather take that trade because it's not as beaten down. But I think even like Baba, Baba's up nearly 100% in the last 2 months. And I'm not saying we were buying 60 and selling 120,
Wow.
but buying up through this 125, like this in time, again, it took nearly a year and a half for it to break down. It probably will take the better part of this year to continue to base out here. And then it probably takes another year or two to get back to its prior high. So I think these are more longer term and not like in years, but just not like a 2 or 3 day trade. Even that Meta, I don't know if Frankie called it out or if one of the members did. In
He's been killing that name.
Yeah. But this was just like
Killed this
it was a very textbook base. It was a very simple trade. We saw that 125 couldn't break and it was just buying through 125. And then you get those little, those pretty quick 25-point moves when no one's really looking at it.
Right.
So I think, it's kind of case by case. Like I wouldn't take pins. I would take Etsy. But I think a lot of those names, I think by the end of this year or going into the new year, like we'll see Amazon back retesting 180. And that's a 80% move basically from here. And
damn,
if you're risking
by the end of this year, you're saying?
I think within a year, I don't think this is that big of a move. You get 1 or 2 good earnings behind, you get, 1 or 2 big gap ups, and it, it's back there. Like Exxon, it's like, it took Exxon what did it take? 2 years? And this is the most, this was the most hated sector possibly. Crude oil at zero took 2 years to get back to its all-time highs.
Yeah.
Or you have a name like Exxon.
A little bit of apples and oranges there, where it's like COVID couldn't shut down.
No, I'm just talking more about just the chart and the
yeah.
It's like if Exxon is not a name that everyone cares about, Amazon, these names, Facebook, Google, these names are much more loved that you can say than like an Exxon. Like no one's like cheerleading Exxon, beating earnings when everyone's still using Amazon and things like that. So
I am.
You're what?
Yo, where's Exxon at? 116? What was yours? UNH or some shit? Humana? That shit is dead.
Oh, hold on. Oh, what was it?
We're getting you a chicken soup, boy. Let's get a little chicken soup in bed.
That's still kind of
at home. We had a bet. Which one?
So 600 for Humana 600.
500 to 600 for Humana, or 100 to 120 in Exxon.
Was it
Exxon? Oh man, look at that bullish engulfing on earnings.
We're getting
Stones
close.
throw away 3% move higher. Oh,
that still stands.
Alert. What?
I said the bet still stands, so it's that's true.
I'm only setting alert for Exxon.
All right, so I'm going to stop sharing. Back to you, Shake. Whatever you want to talk about.
All right, cool. Huh? So Nets last night. No. A few charts I'm looking at. Again, I'm not going to take any trades going into the Fed. I'm going to wait till the Fed comes out. But there are a few charts out there that look very, very, very nice. This TXN. This is like A+ post earnings. More of a macro trade, yes, which kind of sucks in this environment. But this is just like huge consolidation. You look at the weekly chart, it's just, it wants to burst through this little downtrend level right there. They had earnings. They reacted well to the earnings. So now through this, 179 area, that was earnings day highs, 180, 181, that area. It's like a kind of an area. More of a longer term one, that looks good. This UPS today, I think this UPS gave us really, really great information about the earnings, what to look for in earnings going forward. So these UPS earnings, UPS delivered mixed earnings result, downbeat revenue outlook. Now, normally, we're going to hear that news. We're going to say, all right, it's, I'm not trying to buy that stock right away, right? We want cataclysmic beat, forward guidance, up the wazoo, things look so rosy in the future, but this quarter is so different from other quarters because expectations are so low, which sets us up in a really great position. So they deliver mixed earnings result, downbeat revenue outlook, not great earnings at all. Look at some of these numbers: 2.7% decline in revenue from the prior year quarter. For 2023, UPS expects revenue to be between 97 and 94 when they had anticipated 99.93 billion, which is they're lowering their guidance going forward. Now, I do say that, but they also did the good news is they raised their dividend by 6%, new $5 billion buyback. So those things are positive. But other than that, not amazing earnings. We'd expect the stock to rip, but what's the stock do today? Stock's up 5%, and now it's coming out of this huge macro pattern. I really like this stock going forward this quarter. This huge wedge is trying to take down. I had a nice trade in it today, but I virtually got all out. I sold like 90% of my stock just because we have Fed tomorrow. But I think that, because expectations are so low for the earnings reports, any semblance of positivity can be taken as positive news and might take these names higher, which I think is really positive. If you remember coming into 2022, every single bank said there's no bear case for 2023. It was like crazy, right? And then it was the worst year in however many years. So, and now, the earnings expectations are so low, what if, we just see these price reactions to the upside that are just so amazing. So I'm very hopeful on all these earnings going forward. I wanted to highlight the Solars too, SCDG. I bought this one and sold it today just because I don't want that Fed risk. If you look at this weekly chart on this SCDG, this is like an amazing bull flag. Kind of sloppy because of the Daily chart, but regardless, amazing weekly chart, amazing monthly chart. Solar stock starting to wake up. There's that SCDG, and then there's the CSIQ. I guess I should have been looking to buy this CSIQ today. This is the leader. They're trying to let no one in. Look at this move it made last week. 3 days, just face ripping rally. And now look at this. They're trying to get a momentum flag going for the next move higher. So solars are definitely popping. I would like this one to go sideways more so it lets me in, but wouldn't be surprised if it doesn't. So that's really it for me. I'm keeping the watch list small. I'm watching this Fed news, watching these earnings names. Got a lot to type up, but other than that, wait and see time. See what the Fed does. See what these earnings do. Any departing thoughts for the kiddos?
No, man, that's really it. I think we covered a lot.
All right. Well, you guys got any questions for us? Like, subscribe, all that good jazz, and we'll see you next week as an update on all this bullshit. All right. See you guys next week.